How did Bernie Madoff go from being a respected financier to the face of one of the biggest frauds in history? Bernie Madoff's name is synonymous with financial fraud, and his story is one that continues to fascinate and horrify people to this day. He's often referred to as the king of fraud, and for good reason. His Ponzi scheme, which spanned decades, is estimated to have defrauded over 48,000 investors out of approximately $65 billion. But before we dive into the details of his fraud, let's set the stage for his rise and fall. Madoff's story is a classic tale of wealth, power, and deceit. Born in 1938, he came from a humble background, but he quickly rose through the ranks of Wall Street to become one of the most respected and successful financiers of his time. He was a member of several prestigious financial organizations, and he even served as the chairman of the Nasdaq Stock Exchange. But behind the scenes, Madoff was orchestrating a fraud that would eventually bring him down. So, how did he do it? How did he manage to deceive so many people, including his friends, family, and even his own investors? The answer lies in his charm, his charisma, and his ability to create a sense of exclusivity around his investment fund. He promised his clients consistent returns, regardless of the market conditions, and he delivered. At least, that's what they thought. But as we'll explore in this video, Madoff's scheme was nothing more than a cleverly disguised Ponzi scheme, and it would eventually lead to his downfall. In the late 1950s, Madoff started his investment firm, Bernard L. Madoff Investment Securities LLC. The firm focused on trading penny stocks, which are low-priced shares in small companies. Madoff's strategy was to buy these stocks in bulk and then sell them to his clients at a markup. The strategy seemed to work, and his clients were happy with the returns they were getting. But what they didn't know was that Madoff was also running a separate investment fund, which promised even higher returns. This fund was the root of his Ponzi scheme. Madoff promised his clients that their money would be invested in a split-strike conversion strategy, which would generate consistent returns, regardless of the market conditions. He claimed that this strategy involved investing in a mix of stocks and options, which would provide a hedge against market fluctuations. But in reality, he was using the money from new investors to pay the returns to his earlier investors. The beauty of Madoff's scheme was that it was designed to be exclusive. He only accepted clients through referrals, and he promised them that their investments would be protected by a special fund that would absorb any losses. This created a sense of FOMO, or fear of missing out, among potential investors, and it made them clamor to get in on the action. Madoff's scheme was so convincing that even the most sophisticated investors were duped. He targeted wealthy individuals, charities, and even hedge funds, and he promised them returns that were significantly higher than the market average. He was like a financial wizard, and people believed in him. For decades, Madoff was able to keep his scheme under wraps. He filed false reports with the Securities and Exchange Commission, or SEC, and he even conducted fake audits to convince his clients that their money was safe. But it wasn't just the SEC that was blind to Madoff's scheme. Many of his clients were also willfully ignorant. They didn't want to believe that their golden goose was actually a fraudster. Madoff's scheme was a masterclass in psychological manipulation. He created a sense of trust and exclusivity among his clients, and he used this to keep them quiet. He would often tell them that his fund was closed to new investors, which made them feel like they were part of an elite group. This created a sense of loyalty among his clients, and they would often defend him even when red flags were raised. As the years went by, Madoff's scheme continued to grow. He opened offices in London and Geneva, and he attracted clients from all over the world. He was living a life of luxury, with a net worth of over $1 billion. But behind the scenes, he was constantly looking over his shoulder, knowing that his scheme could collapse at any moment. In the early 2000s, Madoff's scheme started to unravel. He was facing a liquidity crisis, and he couldn't pay his clients the returns they were expecting. He tried to raise more money by selling his firm to a private equity group, but the deal fell through. It was only a matter of time before his scheme would be exposed. Harry Markopolos, a financial analyst, had been investigating Madoff's scheme since the early 2000s. He had written several reports to the SEC, but they were ignored. Markopolos was convinced that Madoff's scheme was a fraud, and he eventually went to the SEC with his findings. On December 11, 2008, Madoff was arrested at his penthouse apartment in Manhattan. The news of Madoff's arrest sent shockwaves around the world. Thousands of investors were left reeling, wondering how they had been so duped. The fallout was immense, with many people losing their life savings. Madoff's scheme had destroyed lives, and it would take years for the full extent of the damage to be revealed. In 2009, Madoff pleaded guilty to 11 counts of fraud, and he was sentenced to 150 years in prison. His scheme was estimated to have defrauded over 48,000 investors out of approximately $65 billion. It was one of the largest frauds in history, and it would have far-reaching implications for the financial industry. Bernie Madoff's story is a cautionary tale about the dangers of unchecked greed and hubris. He was a master manipulator, who used his charm and charisma to deceive thousands of people. But his scheme was ultimately brought down by his own arrogance, and he will spend the rest of his life in prison. In conclusion, Bernie Madoff's life is a twisted tale of fraud, deceit, and manipulation. His scheme may have been exposed, but its impact will be felt for generations to come. The financial industry has learned a lot from his fraud, and regulators have tightened their oversight to prevent such schemes from happening again. But as we reflect on Madoff's life, we're left with one haunting question. How many other Bernie Madoffs are out there, waiting to be exposed? Please share your thoughts on this case in the comments below, and don't forget to like and subscribe for more videos on financial fraud and white-collar crime. Thanks for watching, and we'll see you in the next video.